What's up, everybody? We're back with another episode of Bullish Chips, where we talk about chips and only chips. More specifically, the Direxion Triple Leverage Semiconductor Bull ETF, which goes by the ticker symbol of SOXL. My name is Chris. Today is Wednesday, July 2nd. Um, had a good day in the market today, can't lie. We got what we were looking for with the 1 2 down 2 up on the 4 hour and the 3 2 down 2 up on the day chart. We're looking here at the 15-minute, and you can see in the morning we just had to clear this high a day right here, and once we did, it was off to the races. We did have that little dip down to give the failed 2 down on the 4 hour. We got below the low of the 4 hour there, and bounced basically off of the month and quarter flip, which is 24.38. So we kept the month and the quarter green, stayed above that, and we ran. So let's look at the 4 hour so we can see a little bit better here. And we got more than we bargained for on the 4 hour. Remember, we were looking for the 1 2 down and then a 2 up, but really we got the 1 2 down, which turned into a green 3. So that's a 1-3 rev strat. You can still look at it as a 1 2 down 2 up at the same time, but we got what we were looking for. That 1 2 down 2 up completed the 1 2 down combo 2 up here, and if we look on the day chart, that completed the 1 2 down 2 up, which was inside of this 3, which really made it 3 combo 2 down 2 up. So we got everything that we were looking for today. Make sure you can really see that really well. We're still within this purple box, which is the expected move for the week. It does take us up to this monthly downtrend line that we've got here. Remember, our monthly downtrend and broadenings are in this green, the weeklies are in the purple, the dailies are in the orange, and the 4 hours are in the gray. So we can see that if we zoom out a little bit, and give us a better chart, we can see we're right in form here, right? So we bounced off, in that April drop, we bounced off of the monthly broadening formation. We bounced straight up to where we're trying to flip the year back green so that we can go into full time frame continuity. If you look up here in this left hand corner, we've got the day green, the week is green, the month is green, the quarter is green, but that year is still red. And until that year flips green, we've still got to look at possibly another pullback in the market. We do have some gaps to fill here, as highlighted in these green boxes, but if the market is just pushing right now, so we'll see what happens when we get here around this monthly downtrend line and the year flip, which we're approaching very rapidly, and we'll see if we get any pullback. But right now the market is just marching right along. If we get in here on the 1 hour, we can see we got another 1 3 rev strat combo. So to start the day, yesterday ended on the 1, and remember I said we needed to wait on that because it finished like this. So the inside bar, we needed to wait for that to get resolved, and we can see we had the poke down. Really started with the opening down here, which opened 2 down, but it then quickly turned into a green 3, and we were 1 3 rev strat once again. We're off to the races. And you can see where we went up and started to flatten out. It's right here where a bunch of levels are converging. We've got the 78.6 of the 2024 run up. We've got the top of last quarter, or the last quarter's high, and we've got last month's high, all right here. Not to mention this weekly broadening formation, this purple line right here, which is further bolstered by a daily broadening formation and a 4 hour broadening formation, along with along with the monthly downtrend line. So we knew that it was going to be a fight up in here. We said that yesterday or the day before, I can't remember, but specifically. I remember using that phrase. It would be a fight in here. But we got the strats that we wanted on the time frames that we wanted. Again, this is the 4-hour. You can see we got that beautiful 1-3 rev strat, which was like a 1 combo 2 down, combo 2 up, which triggered um, the other strats here. And just kind of domino effect. We went up. We were able to set higher lows on the 4-hour as well. So I drew in this uptrend line. It's not really a hardened uptrend line because it's just the first higher low. I don't really like to draw an uptrend line until you've got a second higher low, but we're just drawing it in right now for kind of reference of pullback, bullish pullbacks. If you get in here on the shorter time frame, you can see that we could probably afford a pullback to here. That also lines up with this daily uptrend line that we've got, that we've been staying above or playing around on this move up. So we're really happy about today's trade. I did get in a little early in the day, just with how the market reacted to ADP prior to the market opening. Getting a little, excuse me, getting a little bit of lift. I was actually looking for on the 15-minute at the open a 3 2 down 2 up. We got the failed 2 down. We didn't go 2 up the next candle, but we got the 2 up on the next one, breaching this high. So we got the combo 2 up, and I entered when we broke this high. I entered very light. It was just one contract because I knew we were coming up against these downtrend line, the 4-hour and the 1-hour downtrend lines, and it could be a little bit risky, but we were above opening print, and so that left us a nice little. Let's go in here to where we were opening times. We were above opening print. We were near previous high a day, and I knew that if we broke previous high a day, that we would probably get a lot of people piling on and driving the price higher. So I got in there. I did wait for the 4-hour to, I'm sorry, not the 4-hour, the day to trigger its strat before I entered more contracts. But yeah, once we broke high a day, that triggered the 1 2 down 2 up. I entered more. Target was last week's high, or basically Friday's high. So, I was ready to let some go there, but I believe we were running pretty strong at that point. Yeah, we were going pretty strong, and so yeah, I was able to. I wanted to take money at target just because I know that we're reaching kind of a point of resistance, but I decided to stay in it. Once again, we've got those longer swings out there still running, so I could afford a little bit of a pullback on these shorter this intraday trade. But I was able to get lucky enough to get. Oh yeah, we got the equal, basically an equal low. I stayed in it because we were still around this area right here. Once we got the equal low, I went ahead and set my stop during this candle. The 3 breached it to the downside, and so I got stopped out here on my intraday trades. I didn't enter anything else just because I wanted to let things kind of cool off. We had a quick run, leaving thin structure, and I wanted to make sure that we weren't going to retrace that thin structure. The 50-day moving average was down here still, along with the week flip. I wanted to see if maybe we might come down here and test the week flip, which was kind of converging with the 50-day moving average. So I didn't make any trades up in here. Probably could have gotten one when we got the 2 up here, but because I think on the 1 hour that was just a higher, yeah. So that was a higher low on the 1 hour. You can see here. Or what I considered a higher low, because it did poke down for the 2 down, but it popped back green. So you could have got in here, but you wouldn't have really got anything. Probably would have got stopped out, if anything, for a little bit of a loss. So I'm glad I didn't re-enter, let things kind of settle down. But yeah, things played out how we wanted it to. So now we've got to step back. You know what I mean? We've got to assess what our next move in is, what next target points are, what next entry points are. I'm going to go ahead and remove these downtrend lines. Do I want to remove the 4 hour? Yeah. No. I'm going to leave the 4 hour downtrend line there just because we haven't totally broken through it. And we got to remember tomorrow is a half day of trading. The market closes at 1 p.m. Central or Eastern time, I believe. And not only that, we've got a ton of economic numbers being dropped. Let me pull out my phone and pull out, let's see, economic reports for tomorrow. At 7:30 a.m. Central, that's 8:30 a.m. Eastern. We've got private non-farm payrolls. We've got average hourly earnings year over year, participation rate, continuing jobless claims, S&P Global Services PMI. S&P Global Services PMI is at 8:45 Central, 9:45. So that's after the market opens. So before market opens, we've got continuing jobless claims, average hourly earnings, private non-farm payrolls, initial jobless claims, and unemployment rate. That's all before the market opens. When the market opens, 15 minutes after the market opens, we've got S&P Global Services PMI, composite PMI, non-manufacturing PMI, and non-manufacturing prices. And then at 9 o'clock Central, 10 o'clock Eastern, we've got non-manufacturing employment and factory orders. So there's a lot of economic numbers being dropped tomorrow, combined with a shortened trading day, as well as no trading on Friday. You know, I personally wouldn't be surprised to see a red day. That's why I'm going to keep this 4 hour downtrend line there. In the grand scheme of things, maybe I won't. Yeah, we've broken quite above it, so maybe I won't leave it there. I'm going to take it off, but just keep in mind that tomorrow flat or red would not surprise me, especially after the push we had today, all the events we've got on the calendar tomorrow, half trading day, and then closed trading day on Friday. A lot of people will probably de-risk, de-leverage, whatever you want to call it. And yeah, probably tomorrow will probably be quiet. I may do one trade in the morning and then just leave it. So yeah, just kind of keep that in mind as you're going in tomorrow. Don't try and size up more than you normally would just because there's less hours to trade, and you've got to you're going to try and get the money that you usually get in a shorter amount of time. It's a good way to kind of take a hit to your account if things don't go the way that you want them to go. So just normal trading size, 1 or 2 trades. We don't need to make it. We don't need to get rich in one day. So as long as we get consistent money, that's the goal. You gotta continue to be able to pay bills and put food on the table for you and your kids, your wife, husband, whatever it is. We want that consistent money. So let's not get too risky tomorrow with everything that's on the table. With that being said, let's just get into the rest of the charts. Because I was able to kind of be at the screens more than usual today, I've already moved a lot of my broadening formations intraday. So you see we've got the 4 hour there already set. I believe my 1 hour, yeah, I've got my 1 hour there. So these are set. Let's look at the swing. Let's get rid of these downtrend lines. So you can see why we popped there. There were so many converging downtrend lines that once it broke, it really broke. So we've got those gone. Everything else looks good there. Let's go to our 15. Let's get rid of these. Remove. So yeah, we've got our 4 hour, 1 hour broadening. We do technically have a 1 hour downtrend line working. So again, that kind of lends more to tomorrow being flat or down at the same time. We do have to look at this structure. right here. That's pretty flaggy right there. That's pretty flaggy. You got the flagpole and the flag. The flag usually points down to draw in bears, and then pop up. Usually the pop extends from the flag as high as this pole was. So we had 24.42 to 25.84, so like $1.40. So you could see 26, so 27. Yeah, you could see it going up to this 261.8 fib, which is also the top of the week's expected move, which is this purple box, which is also the top of the 15-minute broadening, which also converges with the 1 hour broadening, a daily broadening, a 4 hour broadening. Yeah, I could see us popping up here to this 27.29 to 27.50-ish area. You know, the market likes round numbers, especially with small or low price stocks like this, $24, $25. You know, so they like the 24.50s. You'll see those 50-cent strike prices out there too on the options chain. So I wouldn't be surprised if we get up there, especially if we just pop early and then just go sideways for the rest of the day like we did today, maybe even quicker. So let's go down to this 15-minute and get a little bit more granular and see how things close. So yeah, again, look at this flagpole, flag, and look how the day ended. A green 3. Again, we're under this 1 hour downtrend, but if we open up over this or just open strong and push up, I can see us popping. Right now, we closed at 26.05. We're at 26.16. Yeah, I mean, that's like right at this 1 hour downtrend line. So we'll see what happens in the morning. Again, stay light. Telling me to get rich tomorrow. So let's go ahead and remove. This is, again, this price level one in like a peach color. I place every day at the open to mark where the open was, so I can look at it in relation to the previous high a day, the previous low a day. This teal L is the marker for the overnight low, and if you can see this teal H right here, that's for the overnight high. So I have a gauge. I guess it's a little easier to see on this one. So I have a gauge as to entries and targets. You know, if it's above opening print and we get some type of higher low, then we can enter, and our first target would be previous high a day, especially since that converges with overnight high. If overnight high was up here a little bit more, that would be our second target point. Since those two were at the same level, we can see where this convergence of Fibonacci's would be our next target point. So that's real simple, right? We just want to make everything really simple. Let's get back to the scalping chart. Yeah, nothing else really to put in here. We've got our broadening formation, this bright blue, bright teal, whatever you want to call it. That's our 15-minute broadening. The 1 hour broadening is up here, the day and the 4 hour. So kind of a wait and see game tomorrow. If we pop early and just start running, no real need to chase, because again, we've got those swings for the July monthly expiration, September expiration, November expiration, and then January 26 and January 27. So we'll just let those continue to push up, and then look for something around maybe even a shorter time frame. If we want to really get down in there, we can maybe go to the 5-minute and look for a higher low in the 5-minute to get in on. That's what you would have had to get in on to get all of this move today, instead of waiting for like the 4 hour and the 1 day triggers, which were more around this area. So let's go in here. Let's change up our markers for the previous high day, previous low day, and the 4 hour highs and lows. So you can see, again, we flip the week green. Let's take this previous high a day, move it up here. Activate this gray up marker, marks the 4 hour, the latest 4 hour high. is down. Oops, activate, don't remove. Is down in the gray right here. Oops. That marks our 4-hour low. I don't know what's going on with my mouse. Okay, and then let's remove the opening print, and let's get the previous lower day, move it to where it needs to be. Let's go into here. We're just going to do the same thing here. All right. There's our 4-hour. All right. So see, we've already got those moved. Let's just go to our little swing chart and remove that. So yeah, not a whole lot else to say. We've got a lot of economic numbers tomorrow. This gap is a little too far down to do anything about. So I guess one thing that I haven't taken you all through is my notes for the next day and how I set those up. For that, I will go to the 4-hour chart because you can see scalp trades really easily on 15 minutes and 5-minute charts. But for things that you might need to wait a little bit longer for, it's good to keep some notes on. So if you're waiting for a 4-hour trigger or a 1-day trigger or a 1 week or a 1 month or 1 quarter trigger, I set up my notes so that I've got those triggers. So if we look here, you can see this is my notes for today. I did these last night. So it's from July 1st. I let myself know how many trading days are left in 2025. I know the close price yesterday. And for the week of 7/3, I know that the week flips red at 25.49. For July flips red at 24.38. Quarter 3 flips red at 24.38 as well. And the year 2025 flips green at 28.13. This way you can keep a visual real quick and real easy of what full time frame continuity that you're in. So you can see that the week is green, the month is green, the quarter is green, but the year is red. So while we can remain rather bullish, especially on a short-term perspective, from a longer-term perspective, we still got to keep that devil's advocate view strong in our mind of how the market could go down still. Even if we don't see it right now, you never know what types of things could happen. There's crazy things that go on every day in this world, and you never know how they can flip things. Say we implement some crazy tariff, or get into a spat with another country. You never know what can happen. So I've got the full time frame continuity there, easy to see. I've got my expected moves for not only the week, but on Thursday night, I will get the calculated expected move for Friday and put it in there. And the reason why I do that is because of the amount of 0-day to expiration trading that goes on, 0 DTE trading that goes on nowadays. I personally do not participate in 0 DTE trading. Who knows, maybe I'm missing out on a lot of profit, but it doesn't fit my trading style necessarily. And so I don't do it, but I can't ignore the amount of 0-day DTE trading that there is out there. So I like to get a feel for what the expected move is for Friday going into Friday. Even though I trade lighter on Fridays, it still gives me an idea of what I can kind of shoot for or what I should look for. I've also got the gaps listed, right? The gaps above. So we've got a gap from 48.79 to 50, and we've got a gap from 59.30 to 62.23. I've also got the gaps below. We've got the 22, the most recent one. We've got the one from the bounce after April, the April 7 low. This is also the bounce after the April 7 low. Actually, all of these are from the bounce after the April 7 low. Those were gaps that were left. So again, keeping in mind the long-term perspective, yes, we could end up being green on the year, right? But for right now, could we possibly turn around and go fill these gaps real quick and then go push back to go green on the year? I don't know. I'm not calling for that, but I like to keep this in mind just to be totally aware of what's going on with SOXL. I want to know this like the back of my hand. I then have my 4-hour triggers. I've got my triggers to the downside, and then I've got my triggers to the upside. Along with the triggers, and I've got the magnitude, if it's a strat that would trigger. If there's not a reversal strat, and it's a continuation, then I've got target points. I've also got the lower lows, the most recent lower lows listed, so I know if we go even past my targets, what another target could be is the lower low, right? Or just above the lower low. So it's not an exact target, but it's something to point my eyes to on the chart next time I look at it, should my targets be breached to the downside. And then I've got my upward targets, and the same thing on this side. Magnitude, if it's a reversal strat, target if it's a continuation strat, and then instead of lower lows, I've got higher highs. Okay, so I've got the same for the day strats, for the week strats, for the month strats, for the quarter strats, and for the year strats. Now, the one thing you will notice is some of these. Well, actually not now, because the month is so new and the quarter is so new. It's there's only one on the year. But if it is and actually, I need to unbold this. I'm glad we looked at this. As you can see, I do this live. I do this raw. I don't edit it. I don't have a script, so I'm just going through it. But you can see if it's underlined, it means that this strat has been triggered, but it is no longer in effect, right? So it went below 2350, but the price is now back above 2350, so it's no longer in effect. Now, what it did do is it hit the first target, which was 919. Actually, there were other targets, but I erased them as we went through, and then finally we hit the 919. I figured I'd start leaving them on there because who knew how low we would go. But the magnitude of this 1, 2 up, 2 down strat was 621. So if we're really going to fulfill this strat, we do have more downside to go. Again, I don't think that it's going to happen, but we do have targets to the downside and a strat that was triggered. So we do have, if a strat has been triggered, we do go in and change and list what would trigger the 3. So basically a reversal on the same year. But yeah, this is what I've got, and it's just this easy to go and mark up, right? So if we go in here, we're on the 4-hour chart. So if we've got a 1, the low of this 1 is 2582, 2582, and that would create a 3, 1, 2 down. So that's green 3, green 1, 2 down with the magnitude. So the low for the 3, 1, 2 down, the magnitude is the low of the 3. The low is 2445. 2445. That's simple. Should it go below that, we can have a couple targets out there. Now, we could have target this overnight low, but that's not going to be tonight's overnight low. This is still from last night. We wait till the morning to move the overnight lows just so we have the most recent lows. So the next target would probably be the top of this March 25 range is 2373 and 2350 if we want to really extend it. 2373 and 2350, right? And the lower low on the 4-hour, since there was a higher low that was put in, we got to put the 2358 here. 58. So the first lower low is 2358. The next low is 2028. The low after that is 1984. Obviously, there's more, but we don't need to go and list them all. Really, 3 is probably even too much considering how far below this 2350 that they are. But actually, yeah, but we'll leave it out there. So in the inverse, we will fill out the triggers to the upside. Oops, if I can copy and paste correctly. All right, so we got a grain 3, grain 1, 2 up. So for a 3, 1, 2 up, trigger would be the high. Oops. The high, which is 26.28. And the magnitude would not be that very much further, but 26.39. That's again why I say tomorrow could go flat, right? If we fulfill this strat, it's not far to go. We could just boom, fill it really quick, and then just go flat. Again, not saying that's what it's going to do. We've pointed out the bullish point of view. I'm just trying to keep all points of view in mind, and that way we can stay nimble and we can react whichever way it goes. I'm not going to go in tomorrow just thinking it's going to be bullish or bearish, or that it's just going to move sideways, because then you can miss out on triggers. And if I'm gonna play the market, I'm gonna play to win. So I'm not gonna be lazy with it. So a target. Let's go ahead and bring up our scalping chart, because we've got those fib extensions. So targets would probably be probably these three, because they coincide with the top of this week's expected move. So we'll go 26.82, 27.06, and 27.29. Again, it could blast through those, but for right now, that's what we're going to have. We've got our higher highs at 25.84, 26.90, 27, and 31.96. Right? So now let's move on to the day. We're not going to have to touch the week, the month, and the quarter, and the year, because they don't change day to day. Those are already set. We set this at the beginning of the week. We set this at the beginning of the month. We set this at the beginning of the quarter, and we set this at the beginning of the year. We don't need to. Other than weekly, we touch that. These three we don't need to touch, other than the month and the quarter. So again, this goes really quick, and it's even quicker when you've got reverse strats that can fulfill, because the magnitude of the 4-hour strat is the trigger of the day strat. So you just copy the magnitude. Same with the one to the upside. The magnitude of the 4-hour strat is the trigger for the day strat. So we'll go out and see this in the chart now. Let's get back to the cleaner chart. And we can see. So we already had the 1, 2 down, 2 up. It went higher than this 3. So the target for a 1, 2 down, 2 up is the high of the candle prior to the 1. So we breached that. The strat has been fulfilled. So anything past this is no longer part of a reversal strat, but now part of a continuation strat. So if we go 2 up tomorrow, then it's just a 2 up continuation, right? That trigger though is 26.39, because it's the high of yesterday, and you can see that's the 26.39 is the magnitude of the 4-hour. So that's the trigger. The target, I'm going to put the target at the top of the day's expected move, which is 27.37. So we don't have a magnitude, because it's not a rev strat. It's not a reversal strat. And this is, what did I say? 27.37 is the target. Anything above that, we're looking at, we'll do the 28.13 and just leave it at that. All right. So we've got our higher highs here as well. We can make those. None of them have been breached yet. And let's just go in and fill our downside. So this would be a rev strat, so there will be a magnitude. This would be a 2 up, 2 down if it goes to the downside. And a 2 up, 2 down has a target of the low of the previous 2, or the previous candle to the 2 up. So that would be this low. So the trigger we've already got filled in from the 4-hour strat. And so our magnitude for the 2 up, 2 down on the day will be 23.58. This is a 2 up, 2 down. Oops. That's a magnitude. And our targets would be 20. My first target would be 23.06, which is last week's 50%. probably the top of this gap, because although gaps like to get filled, they also like to be bounce points, right? So there's plenty of times I've seen come down expecting a gap to fill. We hit the top of that gap and we just bounce. There's a reason why there's a gap. It's because nobody wanted it down there. And a lot of times, especially with the first test, nobody still wants it down there and it gets bought back up. So we'll just use the top of this gap, which is 22.63. 22.63. And that is our target. Now we do need to put the lower low 23.58. 23.58. And we've got our other ones, 2020. Yeah. So we're all done, right? So now we've got our notes. So now we know. We don't. You can go look at a chart that doesn't have all our day and week. I'm sorry, not day and week, but previous high day, previous lower day, overnight low, overnight high. You can take a chart that doesn't have that stuff, a much cleaner chart. So you do need to look at it from your phone. Again, I'm not suggesting trading just from your phone, but if that's something you choose to do, you've got this as basically as a crutch, a support mechanism. You know that, hey, if we go below 25.82, hey, maybe I'll get a put, and my first target is going to be 24.45, right? Maybe that's where I get out at, especially since we're in a more bullish market. It's harder to set a stop loss for a put than it is to just set a target, take profit at that target. There's nothing wrong with taking profit at that target. If you really need to get back in, you can always get back in, right? That's why you don't trade all of the cash that's in your account, right? You trade a small amount, 10 to 20% of your account is all you should be trading during the day, right? You should have plenty of cash to help either add to winners or get into winning trades after quickly stopping out of losing trades, right? It's okay to take a loss as long as it's small and we're getting in the right direction with our rules, though, right? We're not just getting in the other direction because it goes the other direction. No, I've got to get in that other direction. No, it still has to follow our rules. If it turns the other direction, we give it time to trigger what we need to trigger and within our rules, so that we have entries and exits, clear entries, clear exits, and then you get in. If you don't get in the reversal, it's fine as well, especially if you're just taking a small loss. That's why we keep risk to reward in mind, right? You take a small loss, you don't get into another trade that day, that's fine, because guess what? Tomorrow the market is going to be open as well. 250 days a year the market is open. Sometimes you need a break from the market anyway, right? You don't necessarily need to day trade every day. So you've got this mechanism here so that you know when something triggers, what your trigger is, what your target is, or what the trigger is, what the magnitude is, right? You know if you're going in the direction of continuity, full time frame continuity, or if it's not full time frame, how many are in full time frame? Are you going with the direction of the majority time frame, or are you going against it? If you're going against it, you better watch it closely. You better have a stop out there, because if you're going the opposite direction of time frame continuity, a lot of times that can just be a pullback. So I hope today has been, informational. Hopefully, maybe I've given you a little bit more information about my charts and how I have them marked up. A great day today. It did what we hoped it would do, what we thought it looked like it would do, and we were able to capitalize on it. So if you enjoyed today's episode, go ahead and give it a thumbs up. If you're not subscribed already, go ahead and subscribe. It's free. I'm not trying to get 1 million followers, but I do want to have a community of like-minded people with positive energy where we can just continue to profit throughout the year, no matter which direction the market's going in. So do all that YouTube stuff, like, comment, subscribe. I will look at the comments, and I do take constructive criticism. So if you think I can do something better, as long as you're not just talking crazy, I'm very receptive to it, and you never know. It's something that I could possibly change. It's maybe something that I haven't thought about and can implement. So if you like what I'm doing, feel free to let me know as well. If you need explanations on anything else, let me know. I haven't put out the video showing how I mark up the charts in detail, but I will get that put out hopefully by the end of this week. Sorry, I'm kind of busy during the day too. I've got a career alongside the trading, so I should have that out by the end of the week. But thanks for hanging in there and enjoying the ride with me. I hope you're profiting out there. Enjoy your night tonight. Get some good rest. If you're going to trade tomorrow, keep in mind everything that's on the calendar, and that we've got a shortened trading day, and that this Friday the market is closed. So have fun out there and happy trading.